How's it going, everybody? It's Stas here, and in today's video, we're going to be going over the markets, starting off with the S&P, the Dow, and the NASDAQ, and I also want to go over what I personally did in this market today, plus a bunch of stocks and ETFs that I'm watching and that I'm looking to trade in this crazy market that we're in. And there's some interesting numbers coming out from big banks, big institutions when it comes to the jobless claims report, which comes out tomorrow. So I want to go over that and kind of what that could do in terms of impacting the stock market, at least here in the short term. So if you guys enjoyed this video, as always, hit that like button and consider subscribing to this channel if you want to see further content like this. I'm uploading this type of content pretty much every single day onto this channel, and consider joining our free Discord group chat and our free Facebook group linked down below in the description box. So let's just get right into it, guys. The S&P 500 today experienced, and the markets in general, quite the roller coaster ride, right? Up $28 at the close of the market today, up 1.15%. And guys, this was up at 1.5-ish%, and we saw a massive drop towards the end of the market today. Pretty crazy day. Again, roller coaster ride. If you guys watched my video yesterday, we pretty much outlined this exact move in the S&P 500, and let me show you guys kind of what I was talking about in yesterday's video. So we closed right under this level of resistance, being around 2450, and you guys saw in the title of today's video, watch this level for the S&P. And honestly, there's two levels that you have to watch, one of them being this one and the other one being up here, 2580, which we'll talk about in a second. So I was looking at this yesterday and I was thinking to myself, and again, I outlined this in yesterday's video, if the markets gap up this morning, if we see another pop, well, we break this 2450 level, there's a pretty good likelihood that this bullish momentum, at least in the short term here, pushes up. It continues, right? And we will probably fill the gap up to this resistance, which we did, and that resistance being that second level I'm watching, 2580. And how did I come up with this level? Well, first and foremost, it is a level of resistance from a couple days ago. And if we pull this chart out to the 3-year chart, take a look, guys. This general area back in roughly April, March, that general time period back in 2018, this level 2560, 2580 general that general area, it was a support for the S&P. So once we broke beneath it, obviously it became a major resistance. So that's how I got the top level of that range, right, being again 2560. So it's pretty crazy how this thing ended up trading, right? Massive gap up. We filled the entire gap, saw a strong resistance again at that 2560 level all day. You guys can see it, 2570 we topped off, then we topped at about 2550, then we attempted to break it 3 separate times, triple top towards the end of the day before we saw that massive drop of nearly 100 points, roughly 80 points to be exact, on the S&P heading into the close. So at this point, I'm looking for tomorrow to see what the S&P does if it retests 2450. And by the looks of the futures here after hours, we're continuing this sell-off for the S&P 500. So if we retest 2450, guys, and we hold it, we might fill the gap again. But the thing here is, if we break it, that is where we can start to see a further sell-off, technically speaking here, in my opinion, on the S&P 500. So that's kind of what I'm watching there. The Dow Jones had a pretty solid day, better than the S&P today, up almost 500 points, up 2.39%. And on a technical level, and I didn't mention this on the S&P, we're actually seeing a bit of resistance, generally speaking, here under the 180 SMA on the hourly chart, which is the same for, again, the Dow Jones. So in general, I'm looking at this level here, 22,000, 22,500 being a general area of support, or rather resistance. And for tomorrow, guys, if we break, I'd say 20,000, 20,400, this level right here. If we break that, that could be another trigger for potentially more selling on the Dow Jones. The NASDAQ today, guys, actually got hit the hardest, down 84 points, down 1.1%. And you can see we closed right at a pretty major support on the NASDAQ, being around 74.75, 74.70. You guys can see we closed literally right at that point. So if we break that heading into tomorrow, it seems like the futures are again pushing down here after hours. So we might break that heading into tomorrow. That could be really a signal here that we're going to head lower here, potentially in the NASDAQ, right? And it's interesting how this market is moving at this point, guys, right? Congress is still battling this bill as of right now. They're voting on it. By the time you're watching this video, maybe they passed it, maybe they're delaying it again. Who knows, right? But it seems like a lot of people bought up yesterday, kind of that rumor, and Trump was kind of saying the economy is going to be back to normal, or rather things in general will be back to normal by April. Maybe that influenced things as well, but still, I'm not buying this whole rally, and I'm not looking to get into any long positions quite yet, any swing positions, because I still think, and I'm leaning more towards the side of this being a potential bull trap. We may see a further downwards potential in this market, and that's kind of what I'm sticking by right now, and I've been sticking by that over the past couple of weeks, mainly these past 3 to 4 weeks, as things really just got ugly in not the whole United States, but pretty much everything is being shut down, which is obviously going to affect the economy and job numbers, and again, we'll talk about that in a minute here, jobless claims. So those are some things kind of going through my head. I would love to know what you guys have to think down below in the comments about that, the economy, and just the stock market in general. If you have any thoughts, let me know down below. So what did I personally do in the markets today? Actually, no, before we get into that, let's get into some interesting numbers about these jobless claims. Some of these big institutions gave out some estimates. So on Thursday, tomorrow, I'm reading some notes here, guys, by the way, off my phone. Weekly U.S. jobs claims data will be released for the week ending March 21st. And this is going to include a lot of claims from this CV outbreak, from the damage pretty much it's causing to the economy. Economists are expecting that the report will show a massive increase in the number of people filing for unemployment insurance as the first wave of CV-induced layoffs hit. Estimates range from 1 to 4 million jobless claims. And take a look at this based on different institutions. We have Citi, 4 million. That's the high end here. Morgan Stanley, 3.4 million. BAC, which is Bank of America, 3 million. Goldman Sachs, 2.25 million. Then we have UBS at 860,000. And get this, guys. A number anywhere in that range would be a new record, surpassing the current peak spike of nearly 700,000 new unemployment claims added in 1 week in 1982. So that's insane, especially if we get up to that 4 million level. I really don't know. We're just going to have to wait and see. But if we get to 4 million, that is going to be insane. It would also be a more than threefold increase from the claims filed previously for the week ending March 14th, which the numbers for that were only 281,000, which were actually a 2-year high themselves, that number of 281,000. So just think about it. Any massive number here, let's say we get close to the 4 million, I know the market probably has a lot of this priced in, if not all of it, but if there's some of this that's not priced in, we can see another big move down in this market. That's kind of what I'm thinking. And again, we might not see a big move down in the market because you have to realize this market's already down 30-something-ish%. So it might already be priced in. So let me know down below, what are your thoughts on that while I take this quick little sip of water. And let's get into what I personally did in this market today. So you know that I trade SPXS a lot, which goes up whenever the market, the S&P, is going down, right? It's a 3x leveraged ETF. So let's say the S&P is down 1%. This is going to be up 3%, right? So I didn't trade this. I actually traded the inverse to this, which goes up with the S&P, which the ticker for that is SPXL. So you guys remember what I said earlier. We predicted this trend today. We outlined it in yesterday's video. So going back to the S&P, again, the chart is pretty much similar because SPXL follows the S&P. It just goes up at a 3x rate, right? Looking at the S&P and the levels that I outlined earlier in this video, 2450 being one of them, I didn't take a position until we pretty much popped off the level of 2450. So you guys see S&P opened up today. We ended up selling off, breaking below 2450 momentarily, which was negative, right, for me to take a position in SPXL. But overall, the trend kind of held itself. So I wanted to see a further pop, and for personal confirmation, and we got the pop. And then once we were getting to 2450, I was saying, again, let me see if this thing holds or it gets rejected. And if it holds and starts to pop up, that is where I want to put in my limit order for SPXL. So obviously, now that we can see it here, we can see it held. And then once we started to rise on the S&P roughly at noon, that is where I took my SPXL position, right? And I believe it was closer to 2320. Let me zoom in here. You guys can see it here. We popped up, put that limit order in at 2320, filled, and then I wrote it up to 2420. And I pretty much just waited to see if it was going to show a bit of resistance at this pre-market high, and actually the high that we opened up at close to, which was $24. And when we broke above it a little bit, I just figured, let me put a limit here, 24.20, now that we're close to the resistance, just to play it safe, to lock in the profits, and that's exactly what I ended up doing. So from 23.20 up to 24.20, this move was close to 4.2%. So that's pretty good for me. Daily gain there. And that's what I ended up doing. And you guys might be saying, Stas, you left a lot on the table. Yes, I know. I could have made a lot more because SPXL ran to almost $27, but it's okay. I hit my daily goal. I actually exceeded it. So that's cool with me. That's what I aim for. I'm not trying to grab every single dollar here because being greedy, that leads to trouble, and I'm sure many of you guys can relate when it comes to trading and honestly investing too. It's the same thing. If a stock's overvalued, you know, maybe you should take some profits off the table, but you think it's going to keep going up, you could end up getting burned if the stock doesn't go up. So let's get into some other stocks now. And Apple, guys, this is an interesting one today. We got some bad news about Apple just about like 45 minutes ago, and it's regarding the 5G iPhone. And you can see Apple dropped like a brick. The markets in general dropped, and this could also be a catalyst as to why the markets dropped heavily towards the end of the day. It could be not the whole reason, but maybe one of the reasons. And of course, people taking profits, etc. Because you have to realize Apple's a massive company, makes up a lot of the S&P. So if we get some bad news about Apple and the markets are falling too, the Apple stock dropping is going to drag the markets down at the same time. So it's pretty much bad overall. And we got here that some news, Apple is preparing the ground to possibly delay the launch of its first 5G iPhone as the CV threatens global demand and disrupts the company's product development schedule. And the iPhone being their flagship product, obviously, and the 5G iPhone being one of the most awaited iPhones, probably the most anticipated iPhone. This is bad news, guys. And honestly, I can see Apple falling even further, especially if this market in general falls like a brick, which again, it's possible, especially if the S&P breaks that key level and if other massive tech stocks start dragging the markets down as well. So I'm for sure keeping an eye on Apple tomorrow. I'm not going to take a position either on the long or short side, but I'm just interested in seeing kind of how it reacts in tomorrow's session. So some other stocks that did very well today, Square. This thing has been insane, and kudos to anybody that was able to pick up shares in the 30s, low 30s, maybe mid 30s, and took that short-term gamble, that short-term trade. I for sure didn't do that, but kudos to you, because this thing went from, again, low of about $32 up to where it is now at about $53, and that move being 35%. So if you were able to grab that in a short term like this, that is crazy, considering that historically the markets go up 7-8%. If you're grabbing 35%, 7-8% in a year, right? If you're grabbing 35% in 2-3 days, you're doing pretty well, right? Especially if you're trading with a massive amount of your portfolio, right? That's incredible. So Square, I'm not looking to buy it here. I'm just keeping an eye on it. It could be a short play if this market does turn around. And again, I'm looking at the futures in the morning, kind of what the large caps are doing to get a better eye on that, to decide what I want to do overall. That's what I do every day pretty much. Boeing, ticker symbol BA, this thing has just been insane, guys. It's clearly pricing in a bailout at this point. From $90 per share literally a couple days ago, this makes SQ's move look pitiful. This thing's up almost 50% to the price of where it is now. That's incredible. It's at $160. Today it was up 24%. And am I buying this? Absolutely not. As a trade, at least, right? I do own some shares in my long-term account. I cut the buying for this stock about a couple weeks ago because it cut its dividend. But that's a whole different story. But either way, it could be a short opportunity again if this market turns down, right? Especially because it's still in a rut. It's still a mess of a company. Despite the potential bailout, the problems are still going to be there at the end of the day. So that could yield again to a lower stock price. Just being realistic, right? You have to look at it realistically here. Another one that is doing decent, it's been doing decent, is Disney. It was up 2.6% today. At one point, it was up a lot more than that. It was up like 5%, up to $105. And honestly, guys, based on fundamentals, this move does not make sense, right? And a lot of these moves you'll see, they just don't make sense. It's really just a lot of people buying in, maybe for the Fed hype, saving the economy, whatever it is. A lot of it just doesn't make sense, right? And the fact that Disney's parks are closed, which again comprise 40%-ish of their revenue, that should make the stock go down at the end of the day if we're talking about fundamentals. But again, it's not moving like that. So for me, I think this could be a potential short play, kind of like Boeing and maybe Square. Not much so Square. I'm not looking to short that one. Mostly Boeing and maybe this one. It really could be, especially with, again, a lot of their revenue coming from that parks business. And it doesn't warrant a 20-point move in a couple days just because of this stimulus package. It doesn't make sense. So I think this would fall like a brick, especially if the markets took another leg down. So let's take a look at gold, guys. Slash GC down $22 right now, down 1.35%, but it still seems like it's holding the uptrend from this massive rally over the past couple of days. So I'm looking to see overall if gold holds 1600, maybe 1620, 1630. That could be a support here coming up. Silver up a massive amount. A couple days ago, it was at $11. Now it's at $14. Today, up about 38 cents, up 2.72%. When it comes to the major tech stocks, Apple obviously got crushed today. Amazon down $54, down 3%. Facebook down 3% today, down almost $5 per share. Google is creeping closer and closer to that low, down about 3% today, down $32. Microsoft actually held up decently, down only 1%, but still, it looks like the downtrend is continuing on Microsoft and most of these tech stocks, except for Netflix. Netflix looks like it's in a funky spot, but overall, the uptrend over the past couple of days seems like it is still intact. So, honestly, out of the major tech stocks, I'm mostly focusing at this point, if I were to invest, probably Facebook. Facebook's at the best valuation, in my opinion, but honestly, I do expect lower prices, so I would love to pick up shares, probably in the 120s to 130s at this point for the stock, maybe even in the 110s if we do get that low. So overall, I covered everything that I wanted to in today's video, guys. I hope you guys did enjoy it. If you did, go down below for me and hit that like button, and also consider subscribing. Just consider it. I know some people watch and they don't subscribe. If you want to see further content, subscribe to the channel. And also, if you want 2 free stocks, I have an affiliate link down below with Webull, where if you deposit $100 into the account, you get 2 free stocks, and one of them is worth $1,400. It could be worth up to $1,400. So go get your 2 free stocks. They're linked down below in the description box. I'll catch you all in the next video. Thanks again for watching. As always, your support means the world to me. Peace out.